So what is market geometry? So simply, market geometry in regards to the foreign exchange market refers to a trading style that uses geometric patterns to find the ideal setup. Perfect. So previous sessions, we have been through harmonic patterns, and we're completing the patterns with the additional patterns as well. So far we've been through the rectangle pattern, as you can see right here. We've been through the flag pattern, double bottom and the triple bottom. We were supposed to go through the pennant in today's session. However, I felt like it was more appropriate to complete today's session. We're going to be going through the symmetrical triangle. So I thought it was more appropriate to go through that first before we did go on to the pennant pattern, just because I feel like it has a lot more connection with that as well. So perfect. Let's get started straight away. So what we're going to be looking at today is the symmetrical triangle, more specifically the bullish variant. There is a bearish variant as well. All of the characteristics apply to the bearish variant as well. So as we go through this, I can explain both. Perfect. So what you're looking for when you're trying to look for the symmetrical triangle is you want to start off by looking at the way the price action is being formed. Okay. So as you can see with this, the reason it's quite self-explanatory with the pattern itself. You're looking for the symmetrical triangle, so a symmetrical shape. So with this, essentially what happens is they have equal sides that meet at the point of the apex. Okay, so that's the first characteristic that you're looking for. What makes this easier is with the pattern itself, you're looking for touch points. Okay, so I will get onto that a bit further into the slides. So what the second sort of indication that you're looking for is higher lows. Okay, so this essentially means that there is a, the price action is coming lower and lower, and vice versa with the higher lows as well. So essentially what you're looking for is for the price action to sort of be squeezing down to the apex. And then, like I mentioned with the touch points, you do want 2 or more, at least 2. So with this pattern that I've drawn up, there are 3 touch points on this. This essentially, it makes sure that the pattern is valid at that point. So you've got here the resistance and you've got the support. Okay. And then, like I mentioned, you are looking for that decrease in sort of volatility, or so you're looking for a decrease in the price action. So obviously, beginning this pattern, obviously it's quite wide at this point, and then the deeper you get in, it's like a funnel sort of thing. So when you picture a funnel, it gets, it decreases in size the more it goes on. So it squeezes from left to right. Perfect. And then when you're looking for the breakout, it doesn't show on this slide. However, when we go into the live charts, I will show you specifically what you'd be looking for in terms of the volume. So what will happen is there will be an increase in volume upon the breakout. That's ideally what you want to look for when you're looking for the breakout with the price action from this pattern. Okay. Perfect. So increase in volume, that's fine. And then you can enter on the breakout. However, depending on your trading style. So for example, with my trading style, I always enter on the retest. The reason being is because you get a better entry. For example, you can set a sell limit. Sorry, let me just admit a few more people into the call. Perfect. Yeah, so you get a better entry from the retest, is what I'm trying to say. So perfect. Right. So when you're setting your stop loss, as with most patterns, you are setting it under the support area. So set your stop loss under the support area. You've got your entry on the retest. And most importantly, we need to calculate our take profit. Okay. So when we're calculating take profit, what we want to do is we want to be measuring the support and resistance lines, okay, the trend line. So from the bottom of the support all the way up until the top of the resistance, we want to measure, for this example, I've just popped down 50 pips. And then when we come to place this, we enter it from when we've entered the trade itself. So whether that be from the breakout on this point here, or from the retest at this point, okay? So that's what you want to be doing to create your take profit. So you measure from this point all the way to your take profit. Perfect. So let's get straight into the live charts. So I'm just going to pick a random chart here. Currently, I've got gold up. Let's have a quick look. Let's try odd USD. Let's have a quick look. If anybody has any questions, feel free to pop them in the chat. I can go through them at the end of the session. Let's have a quick look. So because we're looking for a bullish sort of continuation, I'll look for the same example. So let me have a look here. With regards to the time frame, you can have a look at for these patterns on any time frame. So whether you're a scalper, swing trader, intraday trader. Okay. So this looks pretty good here. So let's have a look. So let's draw this out. Okay. Okay, that looks good actually. Yeah, this looks good. So here, here, and then so that's the resistance trend line, and then we're just going to place the support trend line. So let's put that there, and then let's change that to green. Perfect. Okay, so first question for everyone, just to make sure everybody's listening. How many touch points do we need to validate this pattern? Can anybody pop that in the chat for me? How many touch points do we need to validate this pattern? Can anybody answer that? 2 or more? Yeah. Zab, you got that correct? Yeah, 2 or more. That's fine. Perfect. Perfect. Right. So let's calculate how many touch points we actually have on this. So let's have a look which is easier. Let's just do the circle here. So we've got our first one here. So we've got our first one here. On that. So more specifically on that question, so we do need 2 touch points, at least 2 touch points. However, we need 2 on the resistance and 2 on the support, okay? So altogether would be 4 touch points, okay? So 2 on the resistance, so there's 1 there, and then the second one's here, and then let's have a look at the support. Let's see if it's valid. So you've got 1 here, and then you have, let's see, you have your second one here. It's quite close to the entry, but as long as you have your 2 touch points on both the resistance and the support trend lines, then that's fine. Okay. what other sort of characteristics are we looking for with this pattern? Can anybody pop that in the chat? Any particular characteristics that we're looking for? Aside from the touch points, there are a few other characteristics that we can be looking for. What I'll do to make it a bit easier for everyone is I'm going to drop it down to a lower time frame. So, okay, perfect. So where have we gone? There it is. Right. So we've got our touch points. Can anybody point out anything else that would be looking for with regards to this pattern? So I'll give you a hint. It has to do with the volume. Okay. There are a couple of things that we can look for to identify, to validate this pattern. So the first thing that we can look for is the decreasing volume, right? So right here, we have quite a big peak. However, as you can see here, the closer we get to the apex, the more the volume decreases. Can everybody see that? Does that make sense to everyone? So the more we come to the apex, the closer we come to the apex of the pattern, the more the volume decreases. So I could even drop it down here, and there is a significant drop in volume, okay? So as you can see here, if I come back to so you can see here the high volume for the breakout. However, before all of this, we are looking for that squeeze. Where are we? It's actually this one here, right? Perfect. Decrease in trading activity. That's what we're looking for. So that was the point that I was looking for. So the price is squeezing from left to right, and the fall in trading activity. So the way we could look for that fall in trading activity is the decrease in the volume. Okay. So this is just a indicator. Okay. This isn't anything to tell you, something in particular of, when a trade, it doesn't tell you what trades to take. It just identifies particular, patterns, or, it gives you more of a confirmations. So, the way I like to look at indicators are just confirmations, right? It's just a layer on top of what you're looking for. Perfect. So then once we have the breakout, can anybody tell me what else we're looking for with the breakout? And it does equate to volume also. Can anybody pop that in the chat? So I'm just going to bring it back to the slides just to remind everyone. Retest, yeah, perfect. Retest, that's good. Yeah, more decrease in volume. Yeah. So right now, because we're looking for the breakout, we are looking for the increase, then increase. Yeah, fantastic. That, yeah. So we are looking for the increase in volume first. So we do get a slight increase. It's not enough to give us that indicator to jump into the trade. However, if you are watching this pattern, form, and you have got those validating points of the 2 touch points at least, you do have, what's that, around an hour or 2 to make a decision of getting into this trade. Okay, so you do have a slight breakout here. In my opinion, not enough to warrant an entry. With this volume spike here, it's too late at that point to enter. But you can enter on the breakout. There is no retest, I don't believe, on this. We are on the 15 minutes, and I do normally look for retests on the 15 minutes or the 5 minutes. You can drop it down to the 1 minute as well. But for the breakout itself, let's have a look at the 1 hour and see if there is a bit more of a spike in the volume. So it does spike quite a lot here on the 1 hour. And there is more of a decrease on the volume here. So ideally, you want to be looking at the volume on the hour. And then when you're looking for the entry, you're looking at the 15 minutes. So this is a pretty good example, actually, that we found here. It's a really good example. And then, so the next question is, once we found our entry, so we didn't quite get the retest, but if we did get in at that volume spike, how are we setting our stop loss? Where are we setting our stop loss for this particular trade? Can anybody pop that in the chat? Let's have a look. So let's grab the horizontal line. So we're actually popping the stop loss under the previous support, okay? So under this support line. So let's out there. So ideally, what I usually do is I would pop it under the previous touch point. Let's drop that down. And this will be the stop loss right here. So that's your stop loss. Does anybody recall how to measure the take profit? Can anybody pop that in the chat just while I pop in the entry? Let's change that to green. Entry. Okay, so with the take profit, the way we measure the take profit is we are actually measuring. So we can get our measuring tool on the left-hand side here. Who in the chat, we've got 26 people on the call, who in the chat uses TradingView? I'm assuming everybody on here uses TradingView. Yeah. Perfect. So we've got a couple of people that use TradingView. Perfect. Okay, so you come down to the, who's familiar with the measuring tool itself? So you come down to the measuring tool. Yeah, perfect. And then what you want to do, okay, so here's a question for everyone to see if everyone's listening. How do we measure, which parts of the pattern do we measure to get our take profit? Does anybody recall? Let me bring up the slide. So it's this point here. Left side link. Perfect. Perfect. So we're actually measuring from the resistance, the high of the resistance trend line, to the low of the support trend line. Okay. So let's measure that out. Let's have a look. So from the top, that's the resistance, and then the bottom here. So it's around 40 pips. Okay. So now that we've got this, so the calculation is on this part here. So it's 40 pips. So you could do it the other way around, just so it's not confusing. So it's not minus. So around 40 pips, okay? So I'll round it up. And then once we have the measurement itself, where are we placing this? How do we measure it? So I've got one person's mentioned from entry. Okay, so a couple of people have mentioned from entry. Okay, so let's say, for example, let's drop it to the 15 minutes. Let's come back to the pattern. Perfect here. So we can actually refine this a bit further. So if you pop that there and just refine it a bit more. So we do have that breakout there. Let's say, for example, we did enter at this point, right? Because when we're doing market execution, let's say it was a market execution, we just entered upon the break of the pattern itself, okay? We do have, again, the increase in the volume there. Let's measure from the entry, where it is now. So 40 pips, let's see if it does get 40 pips. That's in the way. Okay, it goes to 43 pips, which is pretty good. But let's just measure the 40 pips for now. So it's around 63,734. Perfect. And this would be our take profit. Does anybody have any questions about that so far? Is anybody confused about how the pattern works, or does that all make sense so far? So we have our take profit there, our entry here, and then we have our stop loss under this support trend line, okay? Ideally, to make this a perfect trade, ideally you do want that retest. It would have been even better because let's say, for example, you did have that breakout, and then you had the retest. Let me just measure that out. So let's say the breakout was from this point here. You know, you could get an extra sort of 5 pips on that. At this point, let's say, for example, we did get to, I don't know, let's say we got to 20 pips in. I just want to test everyone's general knowledge of trading now. So let's say we got 20 pips in. To manage your trade, what are we doing at that point? How are we managing our trade at that point? We're 20 pips in profit. And you can see there wasn't much drawdown on that initial sort of entry point. So you can take partials. That's one. Yeah. And move your stop loss. That's another thing. Perfect. Amazing. That's good. Okay. Awesome. That's really good. Perfect. So then at that point, we move our stop loss to entry. Okay. And then, so move the stop loss to entry. That way, we're negating any sort of loss, right? So ideally what you want to do is move, what I usually do is I'll move it sort of 1 pip above entry or a couple of pips above entry. The reason being is it takes into account the commission as well. So then if the price does come back, like for example here, you can look to, I personally would not re-enter because once a pattern is formed, and it sort of, you know, completed its trajectory. So, you know, there's a reason we're measuring the take profit from these 2 points. And there's a reason we're looking at the volume to decrease in order to get that spike. Because if you take, for example, I'm trying to think of a good example for this pattern. Nothing comes to mind right now, but it's like, you know, it's like winding up maybe, I can't even think of anything, to be honest with you. But it's like, you know, stuffing or filling a balloon with air, right? The more you fill a balloon with air, this is a terrible example, the more likely it's going to pop and explode, right? So if you think about this symmetrical triangle as a balloon and it's being filled with air and it's about to explode at the apex, so that's essentially. So when you mentioned can we get in on that back at that entry point, I wouldn't, because of the pattern, the way the pattern is designed. It's designed specifically to go off of this decrease in the volume, and again, you know, it's based off of the pattern itself. So as you can see here, once we've hit take profit, if it comes back down to that, you know, I wouldn't really enter personally. There are other patterns out there that you can look for a re-entry. So for example, harmonic patterns, but just with regards to, you know, the additional sort of patterns, I wouldn't really look for re-entries. Unless let's have a look at this. Let's have a look at a couple of the patterns. So let's take, for example, the rectangle pattern, right? So with this particular pattern, the reason I say that you could look for a re-entry on this, if it does come back to that particular zone, is because you have that strong consolidation within here, and you do have a stronger sort of foundation to build off of, being the support and the resistance. So this resistance being this breakout here, this then resistance becomes a support. So if it does come back down to that, you can look to re-enter. But with these patterns, because it's a trend line, I wouldn't. So let me demonstrate that a bit further. So a trend line, that's the wrong one. So that's your trend line, right? So if this is your previous resistance, which has now become a support, just to throw that out there to everyone, would you look to re-enter at the same point? Excuse me. Would you look to re-enter at the same point? Let me just move this back to where it was. Would you look to enter at this the entry point, the previous entry? The simple answer is no, because of this trend line, right? The difference between the two is this is a a static sort of traditional support and resistance line, whereas this it's a it's a dynamic sort of trend line, dynamic support and resistance line. So that's why you wouldn't look for a re-entry after it's hit take profit, even though it would have been a good entry, to be honest with you. It does look pretty good. Not so much here because it does hit stop loss there if you was to re-enter it. But yeah, it's a pretty good sort of a really good pattern to look for. I'm trying to look for another one. Let's see if we can find another pattern, another example. Does anybody have any questions about that so far? Let's try a different currency pair. And again, you can find these on any time frame, these patterns. You don't have to look through a specific time frame. It can be, on the lower time frames, on the higher time frames. It doesn't make a difference. When you are looking for these patterns as well, I do find it really helpful to, so as you can see here, you can bring the timeline in. I would bring the timeline in a bit further because it's easier to sort of identify these patterns. Whereas when it's stretched out like this, it does make it a bit more difficult to identify them. So if you bring it in like this, it does sort of become a lot more evident on the chart. Let's have a look. And once you get used to finding these patterns, you can find them before they complete. And at that point, when you find them before they complete, it's a lot more beneficial because all you need to do is once you've drawn out your support and resistance trend lines, all you're then looking for is these spikes in the volume. And of course, you're looking for those validation points, the touch points, etc. So let's see here. It would be good to find one more example. Yeah, I wouldn't really count that as a symmetrical triangle. And this is the other thing as well, guys. When you're looking for these patterns, you don't want to be justifying why it's a symmetrical pattern. You just want to, stick to the validation points of the two touch points and the volume spikes, etc., and the decrease in the volume. You don't want to justify why it's a symmetrical pattern in your head, because then you'll just be giving yourself a false expectation that it is the pattern that you're looking for. You just want to go off of the facts that the price action is giving you. Because when I first started looking for patterns like this, I'd find myself at times seeing patterns that weren't actually there, trying to justify why that is a pattern, why that would be a particular pattern, and sometimes it would just, you know, be to my downfall. So here looks like a good one. So it looks okay. It's not the best one. Let's have a look. So this is the bearish example. So let me draw up the trend lines. So you got your resistance. Right. So so again, this is not the most perfect example. So 1, 2, 3, 4. Let's draw out. Oops, wrong one. Perfect. So we've got the touch points. So you could count that as one, but it's not touching. So you've got this here as well, this point here. And then you have the breakout. Let's have a look. You do have a slight decrease in volume here. It then does increase at this point. Let's drop it to the 15 minutes to have a look at that volume. Let's see what we have. It's just disappeared on me. Was I on the 4 hours? No. There it is. It's here. So that's the March. I'm not sure if this is going to go back further enough, far enough. Yeah, no, it's not. Okay, that's fine. Okay, so let's just work with this. Right. So now let's measure the support and resistance. So that's about 50 pips. Let's have a look at the entry. So the entry, again, you would drop down to a lower time frame. Let's drop our entry in there. So if we entered at this point, and then our stop loss. So this is the bearish variant that we're looking at. And then take profit was 50 pips, I believe. Yeah, 50 pips. So let's measure out the 50 pips from the entry. So 50 pips would have been around about here, 61,597. Perfect. So that looks pretty good actually. If we could drop it down to a lower time frame, that would have been amazing. But for this example, we've got to take profit. So this one's not too bad actually. This one's a bit better than the previous one that we did look at. It did have a little bit of a drawdown right here. Because it was a continuation that we're looking at as well, it did just drop off and hit that take profit. So there are quite a few examples. So when you're on the charts and you're looking for these patterns, just make sure that we are dropping down to the lower time frames to look for the entries. Make sure that we're looking out for the volume as well. To find the volume indicator, if you just click on the indicators here, you just type in volume right here, and then it'll pop up. It's the 1, 2, 3. It's the third one from the top, and you just click on that. You can favorite the indicator as well, and then that'll pop up on the right hand side, as you can see here. Turn that one off. Perfect. So you do have that decrease in volume here, and then it does increase as we come to that break. Let's try and look for another one. And also keep in mind with this pattern, because it is a continuation pattern, when you're looking for these, you want to be looking at which direction the trend is going in. So of course we use the daily, identify the trend first, then you can drop down further. Let's have a look. So right here, for example, we're in sort of like a downward trend. And then we drop down to the hour, and then you can start looking for your pattern on that downward trend. You'll be looking for a bullish continuation pattern at that point. That just gives you a higher success rate when you're putting on this trade. Let's jump onto a different pair. Looks pretty good here. But you can identify them. The more you look for these patterns, the more you find them. The more you go over sort of like the validation points, the 2 touch points, the support and resistance trend lines, the volume. So if we're just going off of volume, we're just identifying it off of volume. What you can look for is these dips in the volume to identify where the pattern could potentially be. So you could look for the spike as well when you're looking for these patterns. So the spikes here at this point, one right here. So these are just points to identify them for you. So even here, there's a huge spike here. You could look at this point there. So it's just little things like this that can help you identify the trade itself. Yeah, so that's pretty much how the pattern works. If anybody if anybody has any questions, feel free to drop them in the chat. Feel free to message me on the Telegram group. If you do come across any of these patterns on the charts when you're trading, feel free to screenshot it and pop it in the Telegram group, the Market Geometry Telegram group. That'd be amazing. Then we can have sort of like a conversation surrounding how you're getting on with the patterns and everything. And then next week we will be going on to the pennant pattern. Like I said, we didn't go into it this week because I felt like it was better to touch on the symmetrical triangle first before we go on to the pennant. And then from them we'll complete the other additional patterns. And then yeah, well, it's been amazing for the session today. If you got some value out of today's session, feel free to drop some fire in the chat. Feel free to let your groups know as well, to post it in your groups. But yeah, it's been amazing. I do appreciate every single one of you joining. I hope you enjoy, the rest of your week. I hope you have, a safe time trading. Make sure to keep risk management in mind. Remember, guys, we're not here to, rush into trades. We're not here to take every single trade that's thrown at us, from the signals or from the market itself. We're here to take the quality trades over the quantity. And it's all about capital preservation. The longer you're in the trading game, the more likely you are to watch yourself become successful. So I do appreciate everybody for joining. And yeah, guys, so I'll see you on the next session. Thank you, guys. Take care.